I am joined by Jeremy C., Vice President of Revenue Management with HEI Hotels and Resorts, coming to us from Berkeley, California. How are you, sir?
Good. Good morning, Jason. Thanks for having me.
Oh, you bet. Nice to have you. How you been past few months?
Um, been good. I think can it's got your health, got work, so really can't complain. Things obviously has been changing a lot on us. We continue to pivot and change as well, but I think given all that's happening in the world today, you really can't complain.
And nobody cares anyway.
Right. True.
So quickly tell us about HEI. What are you guys all about?
Yeah. We're about 80 hotels, primarily full service in the upper upscale, premium select serve space. We are all across the country in the United States, really pretty decently spread out, majority in major MSAs. Although if you ask me today, we certainly wish we had more hotels in the Southeast, where certainly the markets are more open. I'd say average size is about 300 plus rooms. And it's been I think it's given the nature of the portfolio where we are in major MSAs certainly was a big shock, big change in the initial stages, and now really I think starting to stabilize a little bit more. But obviously in major cities like San Francisco, New York, things are still definitely nowhere near where we needed to be yet.
Right. So I'm assuming your job has changed quite a bit. Yeah. I mean, talk to us about the adjustments you've had to make.
Yeah, I think all our jobs have changed in the last few months. The question is probably, I think, how many times it has changed, how many times we had to change it. Unfortunately, I think for most of us in this field, it almost changed overnight in 2 weeks, and probably in the next month it just kept changing, with the unfortunate reality that we had to lose a big part of our team. So from I think how we manage oversight of the hotels, how we manage our teams, things certainly have been very different. I think for us, we certainly had to scale, had to have more less oversight, more have each leader watch more hotels. But really, I think for us, I think that despite the changes, I felt the biggest part of my job coming into this year was going to be, how do we do better? How do we get a couple more points here, a couple more points there? And very quickly, with the loss of a lot of our friends, it really came down to how do we keep the team engaged? How do we figure out what to focus on, what's important? And I'm a big believer of just making sure we do the basics well. We have a plan, and I think the most important thing is that didn't change. While certainly demand is different, things are very different. I think it still went back to strategies are not the same anymore. We're not really trying to find rate, but at the same time, how do we change our behaviors? Because there's certainly more hotels, arguably potentially maybe less work, but how do we tweak what we needed to do, but still maintain our basic set of rhythms and principles? And the hardest thing is probably how do we plan? Because every time you have a plan, a governor goes and have a press conference and everything changes very quickly. So I think a lot of that changes personnel side for me had really been, how do we continue to motivate the team? How do we continue to stay together? And more importantly, how do we all get through this? Time seems to fly. Now it feels like 10 months later, and we're certainly still learning and still changing.
Yeah. Can you talk to us about how you're going about pricing your hotel, as the pandemic continues?
Yeah, it's a bit of a loaded question. I think we primarily are third-party managers, so we do have different owners, different ownership styles, different goals from different owners. So going back to essentially having a plan, I think for us is there isn't a one-size-fits-all. Primarily because the different owners, like I said, with different set of goals. So really, it starts with understanding what which owner's objective really is. Some of them are arguably more cash driven than others. So in some situations, understanding that we are close to or not close to a break-even point to simply stay open. The strategy would be to really find the best way to sell the most rooms, get the most revenue. So in those circumstances, we certainly tried different strategies when it comes to pricing, really to find the best mix. I mean, that is our job regardless. I wouldn't say it's all about just making sure you are the lowest priced, but perhaps finding it being the best price in your given space, given time period, perhaps depending on when these reservations are coming in, and really looking at how your weekday mix has changed, and it certainly has changed. I think every couple months.
Do you find yourself more focused on profitability than you have in the past? I hear a lot of that.
I think we have to. In the past, if you're trying to fill up a hotel and you sold, a handful of low rated rooms, they just wouldn't stick out as much because you had a strong base of group or business otherwise. But certainly today, with the low inventories, every room matters. Like I said, I think a lot of different owners we manage for or honestly have different priorities. And so, yeah, I mean, many of them certainly are focused on that, when things start to look better in September and October. We certainly, one of the pivots we had to make was certainly look at, are we charging the right rates? Is there $2-5 more here that can be had? And certainly, I think there's a little bit more focus on that, a recalculation of what profitability really looks like, obviously, because staffing levels are very different now as well than they used to be.
Yeah. How about forecasting? Are you able to forecast at all? What's that look like for you guys?
Yeah, I mean, I think that the biggest part of our jobs really has been forecasting in the last couple of months. Unfortunately, the reality of it is that a lot of our owners had to fund the hotels to keep operating, especially in the early months. So one of our primary jobs is to make sure that the forecasts are accurate and the funding requirements that we ask for at the beginning of the month, beginning of a period are consistent. Essentially, we don't keep going back and asking for more money really to operate hotels. So for us, it's really a mix of a couple of things. One is obviously in the past we used a lot of pace year over year to forecast. That obviously makes absolutely no sense. We really used a lot more of what we would call the last 10 days pace, 12 days, how the most recent period has looked. We certainly have hotels in many different markets, so we look at how each market has performed, and kind of through that, and through our oversight teams, really guide our teams through that process, but really primarily looking at really what more recent data, the last 10, 14 days, really how did September look as we're forecasting October, and how did November look as we go into December, and so on.
Yeah.
And so really focus a lot more on recent.
Yeah. Jeremy, we're out of time, but I thank you a whole bunch for spending time with me today.
Yeah, no, thank you. Thanks for having me, and have a great rest of the week.
Yeah, you too. Thanks.
Thank you.